is a good group that we have today. So hello, everyone. My name is Christian Giraldo. I'm a financial mentor here with Third Decade. Thank you for joining our Nibble Network today. Today, we're going to have our Nibble Network about life insurance. It's going to be presented by Dalia Rodriguez. She's our bilingual mentor here at Third Decade. So without further ado, please receive our speaker of the day.
Thank you, Christian. Hello, everyone. Thank you so much for being here. We appreciate you. So today's session will be recorded and hosted in the shared Google Drive for future reference. Since this is a Nibble and not a feast, put your questions in the chat. We can address them at the end when we discuss further. All of the questions will be collected, answered, and shared in the Drive if we don't get to them, along with references and resources. If you have a question after we have ended, send it to us and we will ensure it gets added to the shared document. This session is meant to be informational and educational. September is Life Insurance Awareness Month, so today we're going to talk about something that many people find confusing or even intimidating: life insurance. But by the end of this session, you will have refreshed the basics, the types available, and how to choose the right one for each individual situation. Per usual, we won't be diving into the specifics since every situation will be individual to the household. Rather, we will review what applies to participants and how to approach the conversation. For those of you who don't know me, I'm Dalia Rodriguez, one of the in-house mentors, and I will be presenting this session to you today. And supporting will be Ashley, our newest member, and Christian. Let's nibble. We will discuss what life insurance is and why it matters. We will briefly cover the different types of life insurance and address ways to guide participants on how to choose the right life insurance for their needs. We will discuss how to address the topic during the meetings, and for those who add insurance information to elements, how to explain their score. Lastly, we will address some common misconceptions on or frequently asked questions participants might have during the meetings. What is life insurance? At its core, life insurance is a promise. The insured or policyholder pays a premium, and in return, the insurer pays a lump sum, known as a death benefit, to the loved ones or beneficiaries upon the insured's death. It can be an essential safety net for the beneficiaries, helping them cover expenses such as funeral costs, mortgage payments, debt, lost income, and also secure the financial future. It can even help secure future education for minor children. Why does it matter? Life insurance is about peace of mind. For those who have dependents like a spouse, children, or aging parents, a life insurance policy ensures they are financially protected. Even for single individuals, life insurance can help cover final expenses and avoid passing on debt to family members. Many families live paycheck to paycheck. Without proper coverage, losing a provider can quickly turn into a financial crisis. Many families don't have the means to replace the income of the person who dies, let alone cover funeral expenses, which vary by service and region. Still, according to the National Funeral Directors Association, the average cost of a funeral ranges from $6,280 to $8,300. In the US, around 100 million adults are either uninsured or underinsured when it comes to life insurance. While parents are more likely to have active policies, only 59% of adults overall are covered. Single women and mothers are among the least likely to have life insurance, with just 41% of single mothers insured. Financial vulnerability is high, as 30% of the people say their household would face financial hardship within a month if a wage earner died unexpectedly. Additionally, only 45% of Hispanic Americans have life insurance coverage. The graph shows that only 40% of young adults ages 18 to 26 have a life insurance policy, which falls in the majority of the third decade's participants' age group. If someone depends on you financially, you probably need life insurance. It is not just for married people or parents. Again, it is also about protecting co-signers, partners, or anyone relying on your income. And let's not forget about the fur babies. Despite having lower rates of overall estate planning, young adults are more likely to formally include their pets in an estate plan once they created it. So now we're going to jump to the $1,000,000 question. Who needs life insurance? The short answer is everyone. Even for a parent who doesn't work outside the home, there would be costs for activities that the parent cover. Domestic activities like childcare, cleaning, cooking, etc. may need to be outsourced temporarily or even for longer periods of time. As I mentioned, everyone should have life insurance, but for parents, it becomes crucial to ensure children are taken care of in case of the death of one or both parents. Spouses or partners, even if they feel they are financially stable, should get a life insurance policy. We won't know how we will cope with the situation until we are on that situation. And giving peace of mind to a partner or spouse to grieve is an act of love that doesn't have to take up a significant portion of someone's budget. It is common for homeowners to forget the fact that they share the financial responsibility of owning a home with either a spouse, partner, parent, or someone else. Similarly, business owners and partnerships. We tend to dismiss the what if curveballs that can happen in life, which we cannot control. So we should remember to focus on what we can control, which would be without an adequate insurance coverage. When working with immigrant households, additional education and support might be needed, as it is not customary or even easily accessible to have insurance in other countries. Hispanic households, for example, tend to be more reactive than proactive. So thinking about the small amount that will be deducted from their paychecks if they are going to get a policy through their employer is an immediate no, or I don't need insurance response. Several things need to be considered, but many are new to the country with limited financial support or even on their own. So highlighting the what will happen if something happened to you and your family is a broad topic can emphasize the importance of having some type of coverage. It is common and natural to hear about repatriation as an opportunity for loved ones to say goodbye, but the cost of repatriation varies by location and distance, and it can be anywhere from $3,000 to $20,000. An anecdote I usually refer to address the conversation that shocked me many years ago as a new immigrant was seeing donation boxes on bodegas, international grocery stores, or restaurants to collect money for someone's funeral expenses. Many have seen them too, and it is one of those aha moments where they see why, even if they don't have kids, life insurance will help their loved ones. Many are the only source of financial support for the families in their countries, so reminding them about a source to replace that income for some time can be useful as well. As sensitive as the topic is, it needs to be addressed. So my recommendation would be to ask questions, use anecdotes. Even if you don't have firsthand experience, you can now share my experience and be gentle. For those with co-signed student loans that don't offer debt forgiveness, their co-signer will be legally responsible for the student loan debt if they pass away. So a life insurance policy can shield the co-signers from that financial responsibility. The needs will vary depending on individual circumstances, but we have several resources and a life insurance needs calculator available in our participants' deliverables folder on Google Drive. Insurance needs should be reviewed and adjusted as the family grows or life circumstances change. Keeping the documents in a safe and accessible place is essential, along with informing loved ones on how to locate them if needed. As with estate planning, life insurance needs and the why, the reason we need it, are one of those topics that not everyone likes to discuss, but it is essential for long-term financial planning, minimizing any financial burden, and securing their loved ones' financial futures. Moving on to when is the best time to get life insurance. Anytime is a good time to get life insurance coverage. But for the third decades demographic group, the earlier, the better, and the cheaper the rates. Major life changes such as marriage, birth of adoption of a child, buying a home, or changing careers are great reminders to get or update coverage. There we go. Sorry. Now let's review a little bit about the different types of life insurance. There are many types, as you might know or remember. However, term life is best for most families, especially third-decade participants, since it is simple and affordable. The primary goal of life insurance is to replace lost income. Term life insurance is the most cost-effective way to protect dependents, though it doesn't build a cash value. Life insurance and annuities are generally poor investment choices due to high fees, and cash value products should be only used as a retirement planning after they have already maxed out all their tax advantage accounts. In other words, it should be the last resort, especially for third decade participants. How to obtain life insurance? The most common way to get life insurance coverage are either through the employer or an independent insurance company. Pool insurance is a simplified life insurance policy option typically offered through an employer organization, often at little or no cost and without medical underwriting, which is huge. While convenient, its coverage is usually limited and may not fully protect the family. In contrast, a private life insurance policy is purchased individually and offers greater flexibility in terms of coverage, amount, policy type, and duration. Although it may require more effort to obtain, including a medical exam, it provides long-term security and stays with you even if you change jobs. Full insurance may suit those seeking quick, low-cost coverage or who can qualify for private plans, while private insurance is better for those needing comprehensive, permanent, or portable protection. Group life insurance through work is a great start, but often not enough, and it is important to remind participants of this. A personal policy provides flexibility, control, and peace of mind when leaving a job. Now let's move on into another million-dollar question. How much life insurance is necessary? Life insurance needs are specific to each participant's situation. However, we're going to cover three main approaches that can help with the decision. One is the income replacement rule, which suggests coverage equal to 10 to 15 times the annual income. For example, someone earning $60,000 will need $600,000 to $900,000 in coverage, with more recommended if they have young children or significant debt. The next thing we will discuss is the DIME formula. It provides a more detailed estimate by adding debt, income replacement, mortgage, and education costs, offering a personalized look at the financial obligations. The last one we will review is the needs-based approach. This considers who depends on the person's income, for how long, and what expenses they will face, including funeral costs, everyday living expenses, and long-term financial goals. Regardless of which method is used, any existing coverage, savings, spouse's income, and employer benefits should be factored in to avoid over or underinsuring. There are many calculators available and additional information in the Third Decade's life insurance resources available in the participants' deliverables in Google Drive. Now let's move to elements. Although we don't spend a lot of time in the meetings reviewing insurance coverage, or we are not actively inputting this data into elements when working with our participants, it is an excellent opportunity to use the insurance risk tile to prompt a conversation around insurance coverage and risk management. The insurance rate measures the percentage of coverage the participant has compared to a conservative ideal based on their income, spending, and net worth. Once the information is added, it will average their life insurance rate, disability insurance rate, and liability insurance rate. Although the insurance needs and preferences are unique to the individual, the score will change as net worth, assets, and spending change. The score serves as a reference to a healthy ratio and when to potentially consider increasing or even decreasing a particular insurance coverage. While insurance needs for the majority of their decades will be minimal, it is important to bring awareness to the gaps in their coverage. It also works as a tool to educate them on potential employment benefit packages. The sample shown assumes that the individual has a net worth of $93,000, a household income of $83,544, and an annual spending of $69,000. A potential area to increase coverage, and consequently their score will be increasing, is life insurance coverage. As with the other tiles, The scores are ideal scenarios and will vary among participants and their life stages. Now let's review some frequently asked questions and common misconceptions. There are many misconceptions when it comes to life insurance and who needs it. The following are some of the most common I have personally seen among my participants. I will be happy to hear some of your experiences. You are more than welcome to type them in the chat or raise your hand, or we can all share at the end of the presentation when we are talking about the questions, if anyone has any questions. But a big one that I usually see among my participants at my meetings is, I'm too young to need it. I don't have kids, so I don't need it. Again, it is important to remind them that it can help cover funeral expenses. It is a way of protecting their loved ones, so a small policy will definitely be needed. And that is the end of my presentation. I hope you enjoy it, and I will now turn it to Ashley so she can guide us to the dessert.